Have you ever heard about DeFi before? Do you want to learn more about DeFi or probably refresh your knowledge on DeFi? If yes, this video is for you. In today's video, we will be talking about everything you need to know about DeFi, so pay close attention so that you won't miss out on anything. Before we get started, don't forget to subscribe to the channel and click on the notification bell so whenever we upload a new video, you'll be updated and you can start making things happen. What do you understand about DeFi? DeFi, or Decentralized Finance, is a new financial system that's transparent to everyone and doesn't require the approval of influence of a third-party financial institutions for its operations. For DeFi to work effectively, it needs the operations of cryptography, blockchain, and smart contracts. Today, our financial systems operate on a centralized system. Banks, stock market, insurance companies, and other financial institutions all having someone controlling the system and its services. This centralized financial system comes with its risks like mismanagement, fraud, corruption, just to mention a few. But what if we could have a decentralized financial system that is independent and doesn't have to go through any third party? Well, that's exactly what DeFi is all about. DeFi is a term given to financial services that have no central authority or someone in charge. Using decentralized money like certain cryptocurrencies that can be programmed for automated activities, we can build exchanges, lending services, insurance companies, and other organizations that aren't owned and controlled by anyone. If you're confused by these terms, you don't have to worry. I'll make it simpler and easier for you to understand. In order to create a decentralized financial system, the first thing we need is an infrastructure for programming and running decentralized services. And the good thing is, Ethereum does just that. Ethereum is a do-it-yourself platform for writing decentralized programs, also known as decentralized apps or dApps. Through the use of Ethereum, we can write automated code, also known as smart contracts, that manage any financial system we'd like to create in a decentralized manner. This means that we can make the rules as to how a certain service will work. And once we enforce those rules on the Ethereum network, no one will be able to control them. Once we have a system in place like Ethereum for creating decentralized apps, we can start building our decentralized financial system. Now let's take a look at some of the components of the decentralized system. The first thing any financial system needs is, of course, money and a more stable currency to operate within the system, and this is where stable coins come in. Stable coins are cryptocurrencies that are pegged to the value of a real-world asset, usually some major currencies like the US dollar. For the purpose of DeFi, we need a stable coin that doesn't use fiat money reserves like DIA. DIA is a decentralized cryptocurrency pegged against the value of the US dollar, meaning one DIA equals one US dollar. Unlike the popular stablecoins whose value is backed directly by the US dollar reserves, DAI is backed by cryptocurrency collaterals. They can be viewed publicly on the Ethereum blockchain. Because DAI is over-collateralized, even if Ether's price becomes extremely volatile, the value of the locked Ether backing the DAI circulation will most likely still remain at 100% or more. In essence, the DAI stablecoin is actually also a smart contract that resides on the Ethereum platform. This makes the DAI a truly trustless and decentralized stablecoin that cannot be shut down nor censored, and it's a perfect form of money for other DeFi services. Now that our decentralized financial system has become stable, decentralized money, it's time to create some additional services. And the first use case that we will discuss is the Decentralized Exchange, or DEX. DEX is operated according to a set of rules or smart contracts that allow users to buy, sell, or trade cryptocurrencies just like a DAI. They also reside on the Ethereum platform, which means they operate on a decentralized platform, meaning when you trade on a DEX, there is nothing like an exchange operator. No signups, no identity verification, no withdrawal fees. Instead, the smart contracts enforce the rules, execute trades, and securely handle funds when necessary. Unlike a centralized system, you don't have to deposit funds into an exchange account before carrying out a trade, thereby limiting exchange hacking, which is common for all centralized exchanges. Furthermore, we also need to talk about decentralized money markets and services that connect borrowers and lenders. On an Ethereum decentralized system, you can lend your crypto out and earn interest on it. Alternatively, when you need money urgently to pay your rent, do some urgent repairs, or need money to buy groceries, and the only funds you have are cryptocurrencies, you can deposit your crypto as collateral, borrow the money, and pay it back later. Can you see the beauty of a decentralized system? In addition, we also have the Compound platform, which automatically connects the lenders with the borrowers and forces the terms of the loans and distributes the interest. The process of earning interest on cryptocurrencies has become extremely popular lately, giving rise to yield farming, a term given to the effort of putting crypto assets to work while seeking to generate the most returns possible. So now we have a decentralized stablecoins, decentralized exchanges, and decentralized money markets. Can we have decentralized insurance in case anything go wrong financially? How about a decentralized platform that connects people who are willing to pay for insurance with people who are willing to insure them for premiums? With a decentralized system, everything is possible without the interference of any insurance company or agent in the middle. Now you can imagine the advantages that DeFi presents, and the advantages are transparency, security, decentralization, free-for-all services, and flexible user experiences, just to mention a few. However, DeFi comes with some shortcomings and risks. You should be aware that DeFi is still in its early stage, meaning that things can go wrong. We've had cases of smart contracts having issues in the past where people didn't define the rules for certain services correctly, and the hackers were able to act on the loopholes and steal people's money. If you want to try any of the existing DeFi services, make sure to do it with the amount of money you can afford to lose in case everything didn't go as planned. When we say a system is decentralized, it doesn't mean it won't encounter some hiccups at the beginning. It's important to understand exactly how a product or service works before investing in it so you can be aware of any issues that may come up. In conclusion, the DeFi revolution has reached early adopter stage, and in the coming years will tell if it will stand the test of time. There's no doubt that a decentralized financial system can benefit a huge portion of the population that currently suffers from financial discrimination, high fees, and inefficiencies in managing their funds. And that takes us to the end of today's video. I hope you fully understood what DeFi is, a term given for a variety of decentralized financial services that aim to replace our current centralized financial system. If you have any questions, comments, or opinions about this video, feel free to share your thoughts in the comment section below this video. Thank you for watching this video till the end. Before you go, make sure you subscribe to the channel, smash the like button, and click the notification bell. So whenever a new video is uploaded, you will be notified and you can start implementing what you've learned. Thanks for joining us on YouTube, and I hope to see you in the next video.